This short video is an introduction to loss mitigation, also known as home loan modification. Let's start by defining loss mitigation. Loss mitigation is also known as loan modification, and typically what we mean is home loan modification. It's a very valuable attorney-based process where lenders work directly with homeowners to create a more feasible mortgage situation. Let's talk briefly about who qualifies for a loan modification. Individuals that have a very high loan-to-value ratio. This would be something that's very common over the course of the past couple of years with the decline in the real estate market, where a lot of people are in a position where their home values have decreased slightly, leaving them with a value of less than what the actual loan balance is. People who are unable to refinance due to a lack of positive credit or late mortgage payments, or an inability to refinance simply because the home is no longer worth what the current loan value is. People who have had rates that have recently adjusted or that are about to adjust. Typically those are rates on option arms, a 5-year or 3-year arm that you've potentially signed up for over the course of the last couple of years that is getting ready to adjust and increase in interest rate, and of course that is going to directly affect the amount of the payment. Pick-a-pay loans also, a lot of folks who've been on those programs paying interest-only payments, all of a sudden 1 month comes, the bill shows up, and no longer have those options to pick from. There's just one single option, which is a payment that's roughly twice, sometimes even 3 times higher than their current payment. People that are in a financial hardship due to a job loss, medical emergency, a divorce situation, income reduction. There's a lot of different scenarios that would potentially qualify you under financial hardship. Let's talk about what we can do for you. Currently over 95% of our clients are offered better terms through our loan modification program. The banks will typically restructure a loan to offer some or all of these type of benefits, and we're talking about interest rate reductions, lower mortgage payments, extended payment terms, principal reductions, sometimes combinations of a couple or all of these different scenarios. Why would a bank want to modify a loan? Let's give an example. We've got a borrower who currently owes $400,000 at 8%. The home is currently worth $340,000 due to a decline in the real estate market. After foreclosing, a bank must relist the property or sell it at auction. Either of those options can end up costing an additional $60,000 or more in losses for the bank. In this example, the bank will lose at least $120,000 if a client decides to literally walk away from the property. Through a loan modification and a lowering of a rate to 5.25% on a 30-year fixed term, the bank will actually make close to $400,000 in future interest payments. The default rates with attorney-backed modifications are 5% or less. Self-help modifications are defaulting at over 50%. And so what this is really telling you with this statistic is that the loan modifications that are made through a facilitator like us are a lot more successful. We're able to truly modify the terms, the principal, and so forth. Whatever it is that we agree to is truly something that works out in the best interest of the client. Let's talk about the size of this problem. Currently there's over 3,000 loss mitigation cases opened on a daily basis. And right now less than 10% of these cases are represented by an attorney. The banks assign certain employees to deal specifically with attorneys, and the attorney processes are sort of fast-tracked through the process. And a lot of times, in fact, I would say close to 80% of homeowners who try to go at it themselves are either frustrated. It's a very time-consuming process. They simply don't get the customer service they're looking for, or they're simply just turned away and told that there's nothing that can be done to help them. Most of the self-help cases, if accepted, can take 3 to 6 months with no significant or long-term reduction in the payment. The attorneys actually get real results. Banks prioritize their files based on severity, completeness, and representation. So the attorney files get placed ahead of everyone else, and so there's a lot of good reasons why you would want to work with an attorney to facilitate a loss mitigation case. Our partner attorneys have been practicing real estate law for over 10 years. Our partner network does thousands of modifications per year. The volume is important because it establishes case files to benchmark results. Our partner network works with the Department of Real Estate and has an A rating with the Better Business Bureau. So what's your next step? If you are in a position where you think you may qualify for a loan modification, what we'll do first is work to identify your hardships. In that discovery process, we like to find out if you're able to take advantage of this opportunity or possibly unable to take advantage of it. We do have some different options that can be presented to you in either case. Our goal is to ensure that you're truly qualified before we even begin a loss mitigation case. Once you contact us, you're going to be assigned to an account executive who will work to gather all necessary documentation to prepare for the negotiation process. The best way to contact us is simply pick up the phone, dial toll-free 1-888-282-1011, and just simply ask us about our loan modification program. Additionally, you can visit our website at ncacreditrepair.com. We absolutely look forward to talking with you and seeing if we can offer some solutions that work out for you. Be sure and pick up the phone or visit our website and let us know if we can help.